Hey everybody, it's Brian Shannon from alphatrends.net. Today is Friday, the 15th of September, and we had a little bit of a rug pull here today. Markets lost some ground, putting them down to negative again on the week here. You can see semiconductors, which we've been concerned about, led the downfall here with a 3% decline today and 2.5% for the week, 6% for the month. So those tend to lead the market higher and lower, which is why we pay so close attention to them. Let's take a look at the charts and make some sense of it. Here's the S&P 500 daily time frame on the right, each candle constructed of 1 day. On the right is, to the left was the daily. And on the right, we have a bar chart with each one of these bars representing 30 minutes of data. On Thursday, I thought we were looking bullish as we had gotten back above this little band of resistance here and the anchored volume weighted average price from the prior high. That was our first higher high with a rising 5-day moving average. So I got long in there, and fortunately I sold a little bit yesterday, but this morning I sold the balance and mentioned that on Twitter and on a video that I used my 5-minute rule. That is, I don't sell first thing in the morning when a stock gaps against me. Instead, I wait for the first 5-minute candle to close, and then I sell it below that low. That gives me the opportunity to say if it had the opportunity to recover here, then I would raise my stop up underneath the low of the day and then continue to raise it until I decide I either want to hold it or that I, sell it under a break of one of these lower lows. So going into next week, the S&P 500, I think, is looking pretty ugly. We've got that 50-day moving average flattening out in 1 day, Tuesday. By Wednesday, it's likely that 50-day moving average will be declining and will be trapped below it. So you've got to be very careful with this market. Earlier in the week, we had some great short sales at Alpha Trends, some really nice winners, in a row. Crocs was one of them. We shorted that one and made a 2% or so profit. CAVA was about a 5% profit on the downside. IPG was another one, and then First Solar was my personal best. That's just the one that I did the better in. Today we were stopped out of a short in BWI. Go figure that. But back to the market itself overall, you have to really have a high level of suspicion for this market. Now we have that 5-day moving average declining. Any rally in here, I think you have to look at it as guilty till proven innocent. That means more likely to fail and roll back over than it is to recover. On Thursday, I said it was the buyer's game to lose, and guess what? They lost the game. That's why I got out first thing in the morning, and you've got to be quick to move to the sidelines when you see something like this develop. From failed moves often come fast moves. That's because the shorts who had covered on this break look to get back in when it breaks back down. The longs who got involved, like myself, get stopped out. Some of them are more stubborn, and then the shorts start to press on it. So, again, guilty till proven innocent, looking ugly for next week. The NASDAQ was looking like it had the chance to break this pattern on the daily time frame, which is an inverted head and shoulders pattern. And I thought it had a pretty good chance of doing that because it broke the inverted head and shoulders pattern on the 30-minute time frame with this move yesterday. Again, however, it broke down, and that's when you've got to move to the sidelines. So we're right now down to the anchored volume weighted average price from the August low, and it seems likely that we'll get a little bit of a bounce in here. And what we're going to want to do is put an anchor on today's action because this was a defining market event. That is, we saw a catalyst that moved the market strongly. So we'll start to focus on that. And over on the daily time frame, it's not completely broken down yet, but it's starting to look pretty ugly. And if we break below, in particular, this low right here, and hold below it for more than a day or so, I think you've got a possibility that we could be in for a steeper decline in the NASDAQ. So you've got to be quick. If you're going to be a trader, that's it. You've got to be quick. And that's why I don't mind being stopped out quick and early and avoid the rest of a bigger loss being stubbornly holding on. So we've got the possibility that the anchored volume weighted average price from the April low will be the next level tested. That's a pretty good decline from here, 3-4%, and seems like it's most likely going to happen. More a question of when, not if. That 50-day moving average here will also be declining in the first couple days of next week. The Russell 2000 continues to dance on that anchored volume-weighted average price from the beginning of the year. That's that thick blue line. And as we've pointed out, meanwhile, it's kind of setting up a head and shoulders pattern that would project lower lows from here. So this area in here has been support. It doesn't mean it will continue to be support. We have this high and we have a lower high. And the more times support is tested, the more likely it is to fail to hold. So be very careful here. If you think you're buying at support, yeah, it's been support so far, but it doesn't have to hold. And again, the more times it's tested, the more likely it is to fail. I would be more interested in looking at a little rally like this, short the next breakdown, stop over here, cover some on the breakdown, lower my stop, and move about it that way. The semiconductors, as noted, they tried to recover in here, but couldn't do it. Now we're down to the anchored volume weighted average price from the April low in here, and there's nothing to say this will hold. It's a level of interest simply. We look to this in a level of interest simply means we look at that area and say, now that it's, it bounced there once, maybe it's going to bounce again. But when we look at the shorter term time frame, is there any actual evidence that the buyers are in fact gaining control? I don't see that evidence. I want to put an anchor off of this level right here. And it's interesting to note too that we, failed right along the anchored volume weighted average price from this prior low. So semiconductors, guilty till proven innocent. If we get a bounce in here, I think it's likely that it will fall short of somewhere in here, create a lower high, and then probably roll back over again. It seems unlikely that we're going to get a quick turnaround, so just be very careful. Biotechs continue to do what they're supposed to do. We've been talking about this market as guilty till proven innocent for a while. If you look at the biotechs here and the way they were bouncing along that year-to-date anchored volume-weighted average price, it's not a blueprint for what the Russell 2000 will do, but it's a possibility, and it just lends us a look at what could potentially happen in the Russell based on the way the trading emerged out of the biotechs that at the beginning of the year had been a leading group, similar to the Russell 2000, which was a leader at the beginning of the year. But back to the biotechs by themselves on that 30-minute time frame, they've still got that declining 5-day moving average. They've got a perfect pattern of lower highs and lower lows. These guys are guilty till proven innocent. I wouldn't be surprised at all to see it undercut this low before an attempted bounce. So what we often see is a quick undercut of that and then a bounce. The reason we get a quick undercut and then a bounce is people who haven't been thinking or proactive or who are lazy have their stops under here. And then you have the group of people who always look at it and go, hey, it's at a new low, I'm going to short that low. And that is silly because, where has it come from? Dropping from 80.5 down to 76 isn't the time to short. You want to short, as it breaks support or after these little rallies fail. So now maybe we rally up towards that level, and then I would be looking for the next move lower if that's what it's going to do. I wouldn't short it on the way up. I'd be looking because maybe it recovers. We want to wait till the trends are aligned, the subject of my first book, Technical Analysis Using Multiple Time Frames. Financial stocks are acting better than most stocks out there. As we've noted, this pattern of lower highs and lower lows has been replaced with a pattern of this low, a higher low, this high, and a higher high. It doesn't mean they're a good buy in here, though. I think they're just a mess. I'm avoiding them. Energy names still having trouble with this prior little band of resistance where it had sellers. So these guys are still in a primary uptrend, but they're a difficult group to trade, and I think you're best off just leaving them alone.